So we opened the bell, and we were about 4 points from an all-time record close on the S&P, but we settled back 4 points. Let's get to Bob Pisani. Hey, Bob.
It's open really right near highs, but we've really flattened out in the last 5 minutes or so. Let's just take a look at the sectors. The key story is the market leaders for the month, which are banks and energy stocks, remain up there. Remember, oil's up around $84. Tech's holding in there. Semiconductors are pretty strong this morning. And once again, and this has happened all month, the defensive names, consumer staples and healthcare, have been on the weaker side. Consumer staples have had issues with the supply chains, of course. As for earnings season, we'll be halfway through on Friday, believe it or not. There's three major issues everyone's talking about. One, of course, is supply chain sentiment and whether or not those concerns have topped out or not, interestingly. Secondly, earnings growth flattening. We talked about that last week. And finally, the notable underperformance of some tech bellwethers on their reports last week. That's got people a little bit concerned right now. I also want to bring up what Kimberly Clark had to say, because this is one of those big consumer names that obviously has issues with higher prices and supply chain issues. This is what the CEO said this morning. Our earnings were negatively impacted by significant inflation and supply chain disruptions that increased our costs beyond what we anticipated. We are taking further action, including additional pricing and enhanced cost management to mitigate those headwinds, as it is becoming clear they are not likely to be resolved quickly. So there's your inflation for longer story. That's been another sub-theme that we've seen. Kimberly Clark, believe it or not, the only company, the S&P 500, at a 52-week low today. Obviously, still an issue, but the important thing is we're seeing not dramatic earnings margins erosion overall. With some companies, obviously, it's a little bit of an issue like Kimberly Clark, but overall, earnings margins are holding up pretty well, and that's one reason we're seeing the S&P hold up so well. If you look at, for example, sectors, consumer staples would be the most impacted by these supply concerns, some industrials as well. And yet, look at the market this month. Obviously, banks have been doing better. Industrials have held up. Consumer staples are underperforming slightly, but not dramatically. So we're seeing some concerns in consumer staples, obviously, about pricing and margin erosion, but it's not dramatic, and it's not preventing the market from moving forward overall. Elsewhere, earnings flattening. I've said this many times. This is happening again this week. Today, we're having earnings estimates at 22.8% for the fourth quarter, and that's what matters, fourth quarter. It was 21% just a few weeks ago. That's pretty flat. Considering what's happened earlier in the year, where we had big increases as soon as earnings came out, this is now flattening out, and we need to see these numbers go up, because the S&P is at a new high, essentially. You keep going up. You've got to have some earnings power behind it. That divergence is a little bit of a problem for the market. The other big problem is the tech bellwethers that reported last week. I mean, my heavens, Snap, IBM, Intel's down 10% since the numbers came out. These are big companies. Snap's not so much, but IBM and Intel is. So obviously, everyone's a little bit concerned about whether tech will dramatically outperform during this earnings season. If that happens, of course, Carl, you're going to have a lot of companies having to make up with some dramatic announcements, particularly things like industrials and materials. We'll see what happens there halfway through on Friday. Carl, back to you.
All right, Bob, I got to get there first. Bob Pisani.
Shepard Smith here. Thanks for watching CNBC on YouTube.